Everyone, hope everything is going well. I wanted to do a video on the problems that we're seeing right now. And this is just a warning sign, more warning signs that 2024 will most likely be the year of the banking collapse and the bail-ins. And the FDIC will not be able to bail out every bank. That's just what I'm looking at. This is just looking at the FDIC, they don't have all the reserves to bail out the big banks in a full-blown banking crisis. And the headline today is Phillies Republic First seized by FDIC. The big failures are here. Well, some people will be like, well, we knew this was a problem for over a year, so why are you saying something now? Here's the thing. Look at this right now. It's from bar chart. U.S. banks finished the year with almost $400 billion of unrealized losses on held to maturity assets. Held to maturity assets. The assumption is this wouldn't be a problem because the Fed would cut a lot this year, but what if that doesn't happen? Yeah, the unrealized losses are pretty huge. And if the interest rates go down, then the held to maturity losses will go lower. But they've actually haven't gone anywhere if you look at it. And interest rates are still where they're at. If you look at the Fed funds rate, if you look at the 10-year from the end of the year, this is not a great position for me, to be honest. And what will this do in terms of the Federal Reserve and interest rates? Because they don't want to cut interest rates from what they're saying because of the inflation numbers. Inflation numbers are a bit higher than what they want to cut rates. But if the banks start to have issues, and this is just the first domino to fall, what will this do? Now, this doesn't mean the market is going to go down from now. My timetable was May from a top. Now, some other people are looking at June, whatever the top is, whether I'm early on my call or not, the fundamentals are at play. And then the technicals will be in play as well. The Russell 2000 is nasty right now, the chart. It hasn't been able to exceed the all-time highs, while the S&P 500 is. Okay, that's the first warning. What's another warning right now? Look at lumber. I did a video um earlier this year. You could go back to it. And I said, "Hey, look, lumber prices have not been going up with the stock market." And you could just see lumber prices, okay, sure. They had a bit of a rebound over the past few days, but the overall trend since March of this year is it's gone down. And what lumber is really interesting, or what's interesting about lumber, is that it shows the demand for housing, basically. And if lumber is going down while the market still makes all-time highs, red flag, red flag, red flag. And there are some people that look at the lumber gold ratio, and we need to keep looking at these divergences. Russell 2000, the lumber futures market. You want to continue to look at the yield curve. Okay, markets may rip higher with the if the dollar goes down and you see it blow off top. Sure, it could be very bullish in the short term, but I'm looking at it from a longer term point of view. The fundamentals don't look so hot. And what I'm going to be doing in the coming months ahead, selling my stocks, and I'm going to be putting on some more short positions. And I may be opening up some bank accounts that I have researched. And, I got a report as well where to park my money because I don't like what I'm seeing thus far, especially the fact that the FDIC doesn't have the money that they say they have. And then I did see that Avi Gilbert just wrote another article on his Seeking Alpha. And then he has an article, and this guy's a technician, and he's saying this. He says that commercial real estate loan risk getting worse by the day. And he's been talking about this for the past few years. Okay, he's talking about German commercial banks, Canadian life insurer has been doing research as well. It's not looking great. And I said this on my Instagram channel. I go to the office on Fridays and no one's there. I don't have to go, but I just do. And ultimately what I have done is I've observed that okay, Fridays are not busy at work, especially the foot traffic. What's happening in other places as well? Okay. That's just something to note. And who's going to get impacted by it? The banks are going to get impacted by it. You're going to see some of these other institutions that rely on banks get dinged as well. And layoffs will happen. The financials of many companies don't look so hot year over year. Okay, you may have a Google that may issue its first dividend. Okay, fine. A lot of other companies not doing so hot. So, anyways, take a look at what Avi Gilbert is doing. He has also a service that researches banks. Not saying those banks are going to survive, but I would not be putting money in a big bank. I don't even think the FDIC is going to be bailing out all the big banks when they go under, or at least when some of them go under. Anyways, let me know your thoughts and I'll talk to you later. See ya. Bye.